good life, and they want a good life, yeah. G-Wagon a class, step in a hit, maga fast in a farraga my glass, chop up a freeway. Money up your flash, but if you broke.
Hey TSWFX family, welcome to another episode. We're going to do a breakdown of EURJPY or Euro Japanese Yen. So we can see on the monthly time frame that there's a structure here that price is respecting. It looks seen as if it's a channel that it's respecting for the last over the last 25 years, going to 26 years. So from 1994 data, we can see that price is respecting these resistance levels and these support levels. Let's now go to the weekly time frame and go to the most recent price. Alright, so looking on the weekly time frame, we're just going to focus more on what price is doing. So we can see that price is in an uptrend from 2012, mid 2012 in the summer, come up, found this high, and ever since it got into this high, it has never retested that level. So we can say that there's a strong resistance level up there, our supply zone. So what we're going to do is mark that level, right? We're going to mark that level, and I always look to this line as a reference point. I used the horizontal array tool because I don't need to know what's happening all the way over here. This is what I'm going to use it for future reference. I just need to know from now until that point, from this point until whenever again price retest that level. Came down, found support here. We're going to mark that level as well. I know some of you are wondering, why is this major support level? This is major support level because since price hit it, it has not even come back to this level. So you know that there's a lot of buyers here. There's a lot of buy orders. And if we zoom in a bit, just to see what's going on there, we can see that there's a huge wick on the weekly. So we can say that there's a lot of buy orders here, or in this region here, this zone, where price has been respecting, and ever since price has not even gone close back to that level. Alright, let's focus on what's happening in this region, because this is the most recent. We just need to focus on what price is doing now. We clearly see that there's a downtrend here. How do we know that it's a downtrend? The highs are getting lower and the lows are getting lower. So obviously this is a downtrend. So what we do is you mark that with the trend line, and all you have to do is mark the highs and mark the lows. So the highs are getting connected now, just like that, and you'll use the lock tool here to keep it in place so that it doesn't shift by accident or anything like that. Then we realize that there's a lot of lows here, so it's a downtrend. We connect those lows and connecting those lows, we can now see the structure that price is respecting or forming. I'm just going to extend this some more just for future reference whenever we might have a retest of this level if it's supposed to find support in the future. So I'm just going to extend it a lot more further just to have room to see what price will do when it reaches it. So we're going to extend it to that level, and we have this structure. So it seems like it's a falling channel structure. So we had one touch here, another touch here, and practically we need at least 3 touches on either the support or resistance for some major movement to go in the opposite direction. So if it's in a downtrend, we always look for 3 touches on the support structure for a massive movement up, and if it's an uptrend, we expect a 3rd touch on the resistance level for a massive movement down. So I'm using this here as a reference to let myself know that, hey, I'm expecting price to be here, and when price goes to that level, I'm expecting it to go up. So this is my weekly forecast. I'm expecting price to do on the daily time frame. So as you see, I'm using the higher time frame for direction, and I'm going into the lower time frame to see the structure even more. So that is basically what we do. We use the higher time frame to see what price is, what direction it's going into, and we use a lower time frame for entry and to just have clarity. So on the daily time frame, we see that price was definitely in a structure here, right? It was in a structure here. So we have the movement impulsively down and a correction, and then we're having that continuation down. Let's make sense of what's happening here. So we're going to move into the daily time frame structure, and of course see what's happening here. Let's make sense of it. So, but before we do that, let's go into the weekly. Let's go into the weekly. So we can see that price had a strong bullish engulfing structure here, forming a bullish engulfing candle. Then we had another bullish candle, an inside bar here. And if you're realizing that I have my inside bar orange, I decided to use an indicator that indicates the inside bar. So that's why they're orange, in case you're wondering. So we had an inside bar, it broke down, found support, continued very impulsively up. And here you can see this resistance level, right? Price came, respected that support level. Continued up, found resistance, and now it's going down. So this is now the continuation down, but let's make sense of it because the weekly candles are very big. So let's look on the lower time frame, what structure happened and how we can analyze it in a lot more simpler format. So we're going with the trend line tool. We see this structure slows. We'll see happening here. See that price have its rising red structure. It made 3 touches, 1, 2, 3 on that resistance level. And not only did it have 3 touches on the resistance level, it also retested this high. So you can see that this high here, which it rejected on the third touch, just use that horizontal ray tool. And of course, I said each time it makes a high or a low, you're going to mark that level because it's a high possibility of price retesting that structure in the future. So we have that level. We saw that price rejected it, came quite close to it, but never quite reached it. Found support. And of course, after finding support here, our price wouldn't have been here now, it would have been to this line, the support line would have been like this, right? Price would have came here, right? Hit support and reject support, hitting that resistance level. So we'd have just adjusted this to the wick, because of course, if this pushed beneath that price and chose not to close below it, then obviously the pattern is evolving. So you would have adjusted this line to this level, and then you'd have the true structure. So now we have this resistance level watching because price rejected from here. Price came, lingered there, hit it, and did not close above. And then a strong bearish engulfing candle for a continuation down, a break, impulsive, strong bearish candle breaking through. Then we have a retest and a continuation down. Let's go on the 4-hour time frame. So on the 4-hour time frame, we see that the price broke through this impulsively, gapped down, and was just ranging for a bit on the 4-hour. Came up, retested, and then what? Continuation. So that's a beautiful way to look at it and see what price was doing. Now, let's observe what price did here. Why did price came here and then continue down? There's a lot of ways you can analyze the market. You can use the zones. So we can say that there's a resistance level here. You can use the rectangle tool now to draw that resistance level. So we can use the wicks from the length of the wick of the body right there, where the wick meets the body, to the end of the wick. You just mark that level of to just know that there's a resistance level there. That's called the supply zone. Supply zone is the range of price to which when price reaches it, it falls or it goes short. So price came into this zone, found support here. We can just use the wick of the body, continue there, go across like that. So price came here, found support, broke through, retested this level, then it came back into the structure and of course it found support here, so you'd have adjusted this. So it found support there, range, retested here, rejected it again, continued up, and practically hit this level. Reason being, this is always evolving, so the pattern that it's forming is always evolving. And then after forming this structure, you can see this is practically an head and shoulder structure, because this support level would have been a lot more higher here. So you'd have had the left shoulder, the head, came down to support, right shoulder, continuation down. And after that continuation down, we can see that price broke through this support level with this 4-hour candle here, found support here, so we can mark that level. We're going to mark that level. We're going to mark the support level here. And when it found that support level, it rejected it a few times. And right in the last 2 4-hour candles, it went impulsively down, but it never quite broke through it. So for this week, we can just look forward for price to either retest this support level or the neckline, what we call the neckline of the head and shoulder structure. So we can look for this. These are the scenarios. A retest of this structure, then the continuation down, as we said before, or it can gap down, retest this level, and then continue down after that. So there are several ways that you can look at it, but after I'm guessing that after all this bearish movement, there's a high chance that it might retest this level for a smooth continuation down to the end of the structure, and then we can zoom out a bit to see where exactly price would be, and we can say that the highest probability is this support level. So we're just going to mark that level first, because price must reach this level before it reaches the other support. So this is a higher probability than the other support level marked. Let's zoom in and see exactly where the wicks are, just for clarity. So we have, alright, good, just like that. So we have that support level marked. This is a higher probability of getting hit than this level. So we're going to use this chart to have the neckline retested here. Where is it? Okay, good. So we had the necklines retested there. Have a, call it a 25 pip stop or a 20 pip stop. Call it around a 25 pip stop there. And to the first support level here, we can call it about, this ratio is what, 1 to 10. So it's not a bad trade. Not a bad trade. So we have a 1 to 10 ratio here, and that would be looking for the short-term trade. And of course, the long-term trade, for those who like to swing, is to the support structure of the higher time frame, which would be this trend line here. So this would be the highest point where you extend your take profit, and that would bring your trade to about a ratio of 1 to 32, which is pretty good. So that's it for now, and see you on the next episode. Remember to subscribe.